why from our projected levels the growth rate has come out to be somewhat better.
Okay, that is the only thing you think has led to an IIP of minus 0.5 compared to a poll of probably minus 1.5?
Yes, that's right.
All right.
That's right.
Okay, now to come to your views on inflation. Saumya's calculation is that the core inflation is probably 7.8. I think the last time around we got 7.82 and the month before we got 7.84. These are all calculated numbers from economists. So there is a laboriously slow crawling down of core inflation, even as food inflation has jumped paces from 9.1 to 9.66%. Samiran, where does this leave the Reserve Bank at all on June 3rd? It still has one more number perhaps? No, it doesn't have. This is the last number it has to react to on June 3rd.
Well, at this moment, our view is that the RBI will stay on hold on June to evaluate more how the monsoon situation is panning out, whether we are having an El Nino effect leading to a droughts kind of situation or not, because clearly we have one more month of so-called bad inflation data on the back of base effect. Then from there on, you will see positive or favorable base effect taking over all the way up to November, December. So we will have to see where inflation peaks out next month. If we are peaking out at below 9%, then possibly the favorable base effect can bring it down all the way to 7 or below as we move forward in the year. Now, this will mean that from now on, the momentum calculation on inflation will be extremely crucial to see whether we are seeing any meaningful correction in the inflationary process or not. My sense is that core inflation is sticky because of all kinds of data-related issues also. So we'll have to wait for the June print in July to see the impact on housing inflation, which would have some meaningful impact on the core inflation number, but this data comes out only twice a year, so to say. So unless we get the June print, we will not know whether the housing situation is correcting or not.
Samiran, sorry, Sajid, actually I just wanted to come to you about the trajectory of the CPI data, considering that now we're working with a more prominent risk of an El Nino.
You know, this month actually good news, bad news. The good news is even though the year-on-year print for core has not changed much, but the momentum has reduced quite significantly. At 7.8%, this is a month-on-month momentum of 0.4, which we haven't seen in a long, long time. So I think we need to be clear here that there is some good news. There is finally a softening of core. I presume this is coming from services inflation, which is not that unexpected, given that, you know, services growth has been very muted. The worrying part is, you know, food prices have gone up more than 1%. And if you look at the high-frequency food data in the month of May, already in the first 10 days, you've seen vegetable prices go up by more than 7%. So if that trajectory continues, even without El Nino, my worry is you're going to get, you know, food inflation significantly higher. Now, as Samiran correctly says, you know, the year-on-year numbers will get much better, but let's not be fooled by that. The RBI was very clear. It will look through any temporary base effects, because by December, the base will reverse. So even though the November print could be below 7%, when the base reverses in December, this could jump up well above 8%. So the RBI knows that. And I think how food inflation pans out and whether the softening of core momentum is noise or is it something more real, I think will be the key going forward.
Okay, wait, I just have a more technical doubt which I want to clarify with you gentlemen. Sajid, when you are calculating the core inflation, do you just look at that miscellaneous number? That index number was 122.4. It has risen to 131. Is that all that you calculate for year on year from April 13 to May 13? Sorry, April 2014. Is the miscellaneous index number all you want?
Yeah. So there are various ways to do this, Lata, because there are slightly different definitions. The typical way to do this is you take out food, you take out fuel, but you add tobacco products into core, which is ordinarily part of food. So that's the cleanest way of doing it. And if you do it in that particular manner, you basically get 7.8% for this month, which is a 0.4% seasonally adjusted increase month on month.
Okay. Soumya, what have you made of the core inflation crawling down to just 7.8? You still call it a very good number? I mean, it's just moving with 2 basis points every month.
See, I'll tell you, I mean, in sense of why it's called it a good number, because if you look at the average of the core CPI from April to March last year, it was at 8%. So at 7.8%, it is lower than the long-term, if I call it a long-term average, the average of 8%. The other point which I'd like to mention over here is that there have been some softening. I think this time what has happened is that there has been some softening of the service inflation, and if I look into the 4 components, typically the medical, education, recreation and transport and communication, which makes up about 18% weightage, that has softened significantly. And but the bad news is that there are some components in the core, like education, which typically tend to go up in the month of April and May.
Okay.
So 7.8, even though I maintain that it's a good number, but there is a possibility of an upside to that number in the in the month of May itself.
Okay. So very quickly, let me get to someone who is not looking at just these numbers, but just the overall number. Neeraj Gambhir of Nomura has joined in. Neeraj, well, just to summarize, IIP has fallen to, has contracted by 0.5%, which is widely being perceived as good news because everyone thought it would contract by 1.6%. So that's a smaller than expected contraction, largely because of consumer non-durables coming in terms of coming into growth mode from contraction mode. On the inflation front, we have a number of 8.59, which is worse than our poll of 8.53, but core inflation has come at 7.8 compared to 7.82 and 8.4 in previous months. Net, what should the bond markets take away? A non-event of, a no-action credit policy on June 3rd?
Yeah, I think so. I think from policy standpoint, while the data continues to paint the mixed picture that we've been, seeing a sort of Indian version of stagflation, there is nothing which is, to my mind, as material a change as, a change which could have warranted a major, deviation from the current line of thinking that the market has, that probably will not see any change in RBI's policy unless and until there is a very meaningful shift either in the headline or in the core inflation numbers. I think the industrial production numbers, yes, is slightly better than what the market had thought it would be, but really it's not a game changer number in that sense. We still continue to see a very, very weak economic momentum, combined with sticky and high inflation. So I would say that the market will probably be a little relieved that the inflation print, which was supposed to tick up, has not really, at least on the core front, has not really ticked up. But at the end of the day, we still have a long haul as far as the the inflation trajectory is concerned. There are still quite a number of uncertainties, especially with relation to monsoon and its impact on food prices. So I think market is going to be in a wait and watch mode.